What's going on, gang? If you're new to credit cards and you need to know how they work, this is the video for you. This is for beginners, okay? So first up, the first thing you need to know about credit cards is that they charge you what is called interest. If you don't know what interest is, you absolutely must know what this is. Do not get a credit card and start spending money until you understand this, okay? So interest is just a fee that the credit card company charges you on top of whatever you bought, right? And it can add up fast. So credit cards a lot of the time will have interest rates up in like the high 20s, sometimes even low 30% range. So for today's example, we're just going to say it's 25%, which is a crazy amount. You don't want to spend money and carry a balance of 25%. Here's why. So let's say you have an outstanding balance of $100 throughout the year on the credit card. You want $100 worth of whatever, and you carry that balance over and over, and it starts to accrue interest, right? So at 25%, that means they're going to charge you $25 per $100 that you have borrowed on that card per year. So at $100, that's only like $2 a month, right? We just said it was $25 worth of interest over a year. So if you divide that by 12 months, it's a little over $2. So it doesn't seem like it's such a big deal. But the problem lies is when you start to charge more, and this spins out of control quickly. So let's say you have $1,000 average balance on that card for a year as well. So again, at 25%, now it's going to be $250 of interest every year. Now you've got about $20 a month in interest. You're still maybe thinking, maybe that's not so bad, right? What if you have 10,000? Now that's $2,500 a year that they're charging you. That's a couple $100 a month, right? So if you pay, if your minimum payment is $250, but every month the interest is 200, well, only $50 is going to go towards paying that actual balance down, what you actually bought. They've charged you $200 that month if you have a $10,000 balance in the interest fee. That's the money that's going to the bank. So again, you make that payment for $250, and only $50 or so is actually going to go towards the principal balance that you put on that card. So you can see how this is going to take forever to pay this off. So you don't want to carry a balance. You want to pay it off as soon as possible. So of course, the higher the rate is, the worse off it is for you, and the better off the bank is going to be. They're going to make more money off of you with the higher amount that you put on the card and the higher the interest rate is. So I hope you're starting to see how this can spin out of control fast and lead to, quite honestly, a life of financial misery. Another thing that you should consider is, when you're putting things on the credit card, let's say it's a meal or an outfit or something that you went and bought, something that maybe isn't necessary, and you take months or even years to pay that off, you're going to end up paying way more than the item costs. Do you want to be making payments on a meal that you had a couple years ago, right? Like if you have a big balance, that's quite literally what you're doing, right? You go out to a restaurant and you're splitting that payment up across years or months. So think long and hard, because you're not going to want to be making payments on that way down the road. The next thing that you should consider when you're looking at opening a card, maybe for the first time, is if they charge an annual fee. In my opinion, especially if you're a beginner, you should never have a card with an annual fee. So hopefully this is self-explanatory, but it's literally just a charge that the company puts on you, $250 or $125 every year, just for the privilege of having the card. Now, a lot of these have some extended benefits and things like that, but if you're a beginner, these are really unlikely to outweigh whatever you would pay for the card. So avoid anything with an annual fee, okay? Other things you need to know: if you are late with your payments and things like that, the bank is going to charge you extra fees for that. Those fees looks like average between $25 and $40. So, pay your bills on time, right? The easiest way to keep your credit score high is to simply pay your bills as agreed. That's all the bank is looking for you to do. So avoid late fees and extra penalties and things like that, and just pay on time. There's also an over the limit fee. So if your credit limit is $500 or $1,000 and you get to $1,001, they're also going to charge you a fee for that. So make sure you stay within your limit. So the interest, the annual fee, and then the penalties are probably going to be the three biggest cons to a credit card. But there's also some pros if you can keep your spending in check. So I would say the number one benefit of a credit card is that it's the bank putting their money on the line and not you. So you have more buyer protection. You go out and you buy something, you put it on the credit card company is paying that money to the merchant. And if something goes wrong, well, the bank is going to fight for their money. They're probably not going to fight as hard for yours. So, if you put your charges on a debit card, for example, the buyer protection just isn't as good. Your money is what's going to be tied up and not the bank's money. So a credit card, again, has much better buyer protection than a debit card. Rewards can also be a nice pro on credit cards, but again, they never outweigh the penalty of having to pay interest or simply charging things just to earn those points. It never financially makes sense. If you're going to accumulate points and bonuses by spending, just do it with what you're already spending. Put your tank of gas on there, your monthly bills, things like that, but do not charge money in an effort to accumulate points. It just doesn't make sense. And again, if you're paying interest, it's going to very easily outweigh, the interest is going to kill you versus, the 1 or 2% that you might be getting in rewards. So again, it just doesn't make sense to carry a balance in order to accumulate points. So the last pro that I'll mention today is that it helps build your credit score, right? It'll get you better terms on future loans and things like that. So any credit card will help you build your credit if you pay it on time, right? If you start being late, it's going to kill your credit score. But simply, if you pay as agreed, if you pay your bill every month, your credit score is going to go up. End of story. It's simply based on paying your bills and being wise with your credit. So make sure that you're paying on time and your credit score will grow. If you're not sure how to get a card and perhaps think that you won't be approved for one, this is especially true if you are new, never had credit or never had a credit card. There's things called secured cards. You can probably get this from your bank, or if you do your banking with a credit union, even better. But a secured card is essentially you put up a piece of money, and that's the insurance or the secured part of the card. So if you put up $500, the bank will give you a $500 limit. This removes any risk that the bank has. So if you don't pay, well, they've got $500 sitting there waiting that they'll just pay it. So, but if you pay again as is agreed, eventually they'll release that $500 or whatever the limit is, and it'll just be like a standard credit card. So it's a good way to start. Almost anybody can get approved. I mean, if your credit score is literally in the dumpster, maybe not, but even if you don't have any credit, a secured card is probably a good idea for you. So check out your bank or your credit union, and that might be a good option. Store cards can also be a little bit easier to get approved for. So thinking like clothing stores or electronics retailers, Targets, Walmarts, things like that. I think they all offer cards. But again, just have to be very careful not to overextend yourself. But the store credit cards are usually a little bit easier to get approved for. Just be really careful because the interest is almost always very, very high. So just don't carry a balance. You'll never get charged any interest, and then it's really irrelevant, right? If you pay your full bill at the end of the month on time, you'll never pay a cent of interest. So I hope this quick video, helped you understand credit cards a little bit more. If you have questions or if something isn't clear, please leave a comment. I would love to help you out. So I appreciate the time. Thanks for sharing your time with me today, and hopefully we'll see you next time. Thanks.